Let me ask you a question. What comes to your mind when I say these two words? Federal Reserve. Do you think about Jerome Powell giving some sort of speech on a podium? Do you think about a conveyor belt of money being printed out infinitely? Or do you think about some sort of dark secret society that only old rich people can get into? Well, essentially the Federal Reserve is the central bank of the United States, which provides security and financial stability to the market. But as an investor, can we have an edge by understanding what the Federal Reserve is going to be doing next? Can we pick up on any sort of tips or processes that maybe they do that helps us understand when should we start investing? And I think I've been able to break this on down. Now, I want to tell you guys exactly what I believe is going to happen, and I want to break it down into the most simple way possible. So the way we're going to break this down is to understand 3 different phases of the Federal Reserves. And these phases are going to be phase number 1, we are going to have raising interest rates. Phase number 2, which is going to be pausing interest rates, and phase number 3, which is going to be cutting interest rates. So let's start with phase 1. Phase 1 is all about raising interest rates. And as we've seen in 2022, Jerome Powell has come out 7 different times to raise interest rates, anywhere from 0.25% all the way up to 0.75%, and in December, we ended with another 0.5%. Now, the Federal Reserve, who is going to be controlling the money and controlling how high we go on up for interest rates, have a target, and their target is 5%. Right now, as I'm making this video, we are currently sitting at a 4.25%. So as we go into 2023, we still are in phase 1, which is raising our interest rates. Now, as we can see from this chart, the stock market hasn't really liked us raising interest rates, and it shouldn't. When we are raising interest rates, we are slowing down spending, or the fancy word is going to be tightening monetary policy. What does tightening monetary policy mean? It essentially means let's make everything more expensive so the average consumer doesn't spend a lot of money. That means when you swipe your credit card, you're gonna have to be spending more money on interest. When you try to buy a home, it's going to have a higher mortgage. So the whole point of phase 1 is to slow down spending. And as we slow down spending, inflation is going to follow with it. As you can see in this chart, we've already peaked in inflation last June at 9.1%, and as we raised interest rates, inflation has dropped, but so has the stock market. And everyone is now expecting the next bull rally to come any minute. Well, it's not going to. The next time that we have the next bull rally is going to be in phase 3. Right now we're in phase 1, and as we head to phase 2, that's going to be after we hit our 5% target. Our 5% target is most likely going to be happening sometime at the start of summer. As we move into phase 2, this is going to be when we pause interest rates. Pausing interest rates is where the market is now adjusting to its new home. After about 3 to 6 months of having paused interest rates, Jerome Powell is going to come out and he's going to state we are going to start cutting interest rates. This is what you want to see. Now, let's take a step back and let's think about when was the last time we cut interest rates. We cut interest rates back in 2020 as the pandemic hit to save us from going into a recession. Jerome Powell stated that we're going to be cutting interest rates, which is the opposite of raising interest rates. When we raised interest rates, everything became more expensive and the stock market crashed. As common sense, when we think about this, when we cut interest rates, everything becomes more affordable. The printing machines come back on, and that's when we see the stock market spike. Think about what happened in 2021, where we saw housing markets at highs, we saw crypto at high, we saw stocks at high. That will happen again as we start cutting rates coming on up at the end of 2023 or 2024. So essentially, what do we want to be able to get out of this video right now? We want to understand that the Federal Reserve is going to follow a 3-step process. Phase 1, phase 2, and phase 3. Phase 1 is what we're in right now, which is still raising rates, and we still have to raise rates until we get to 5%. After we hit our 5% goal, we will be pausing rates, which will be phase 2. And after about a 6-month consolidation period, we will be cutting rates. Cutting rates is when the next bull rally will be here. Do not FOMO in too early. Do not be a person that says, I need to jump in now. Phase 3 is when cutting rates happen. As we have seen in 2020, that is when investors are the most excited and when things are the most affordable. I think the biggest takeaway here is we have to stay patient. We know what has happened when we cut rates. I mean, let's just take a look at last year. The market fell 19.7%. We're not going to see any sort of dramatic change until we at least start pausing rates. Why would we see any sort of dramatic change just because we went into the new year? We're still doing the same things that we did. Let's break this on down into an analogy that everyone can understand. Imagine in 2022, all we did was eat candy and ice cream and we gained 300 pounds. Now, as we moved into 2023, we wanted a change, but we kept eating candy and ice cream every single day. Would we expect any sort of different result? We wouldn't get any different result until we start changing our diet, until we start going to the gym. And that's essentially the same exact thing that we have with the Federal Reserves. A lot of investors are betting big very early right now when we're still doing the same thing we did last year. Let's wait until we get to phase 2 or even better phase 3, but the impatient are most likely the ones that are going to get the most hurt. The market still has a lot of consolidating to do before we get to that phase 3 period. If I were you, I would still keep stacking up my money, keep everything in cash right now, and start getting ready for investments. I am not opposed for anyone that says Tesla's down 40% right now, Amazon's down 40%, and to start looking for long-term plays. I believe that Tesla, Amazon, Apple, Google, all these blue chip plays will be higher than where they are currently at this moment in the future. But I don't know if we are at the exact bottom yet. And if we follow the charts, if we follow what we've learned in this video right here, we wait until the bull rally, we are going to have a huge chance of success. Why take a 50-50 in the stock market when we can have an 80-20? I want to make sure that every time you invest, you have more reward than risk, and that's the type of information I want to give you guys right now. If you guys enjoyed this content, make sure you guys smash that thumbs up and subscribe. I hope you guys enjoyed this video, and there's going to be a lot more coming for you in 2023. Thank you so much for everyone who tuned on in, and drop a comment below on what you want to see next. I would love to go over it and help you become a better investor.